Have you guys ever hit a really big trade and then immediately after that, within probably 48 hours, you lost a big chunk of those profits because you got too hot-headed? Well, if that hasn't happened to you, then you're lucky, but it happens to me quite often. And so I want to cover this week not only a killer trade that I took that netted me over $14,000 in 20 minutes, but also a pattern I've noticed in myself over the years where immediately following a big win like that, I make some bad decisions which cost me quite a bit of those profits. And there's a very small change that I'm going to start implementing into my trading to hopefully help combat this, because it's all about going to study your patterns. What do you do best? And then where are you falling short? A little bit of a disclaimer, you guys should actually be familiar with this if you're pretty frequent to my channel. When I have big wins like this, which this trade was over 300% profit, I am trading 0 DTEs, which means that the option contracts expire that day. They are very volatile, very risky. However, you guys know I preach that as long as you understand risk management, you can pretty much trade whatever you want. Now, for me, I actually had a very, very low risk, high reward setup, which is why I went so heavy and which is why I was comfortable trading 0 DTEs on this trade. A lot of people, when they hear that word, they just think, oh, that's extremely risky. How much were you risking to make that? And I want to just lay it out for you, plain as day, the numbers. So basically what I was looking for is I had an alert set near this line of 397.27, and I was looking for us to come back up and retest this area sometime during the day to see if sellers were still present. And so when my alert got triggered, I was paying attention to price action, level 2, time and sales, all that good stuff. And so typically I do not trade before 2 p.m., especially on a Thursday. However, I was willing to break my rule because my alert got hit. I saw the push up and I saw some weakness. There just really weren't any buyers behind this move, and we were moving before 2 p.m., which for me was just, okay, we're on lower volume. Is this really going to hold? And so once I saw a couple different things line up, my indicators were also pointing in the direction that this was a weak move up. There really weren't any buyers to support this. And if we rejected here, we could have had a mean double top, which then could have fueled the price action to the downside. And I was looking for that 395 gap to fill, which we did perfectly. In simple terms, guys, this is just me looking left and saying, okay, what happened in the beginning of the day? We caught resistance here, aka there were some sellers here. Buyers did not want to buy above this level. Okay, so I keep that in my mind for later in the day. I set my alerts. I am not sitting there watching the screens all day. Once my alerts get hit, I was only risking new high of day, guys. Look how little of risk that was for this trade. Between 397.29, my entry was not perfect. It was in here and then I started to scale in. I was fully sized right here and I got that massive flush down. However, my risk was above this new high of day break here. That was, let's see, if I entered around 397, that was less than 50 cents from here. So on options with 0 DTE, I was maybe risking 10-15%, if that. And I caught the flush perfectly. And so from 140 all the way to 2 p.m., I was able to make over 300% and over $14,000 on this one move. And it was just being at the right place at the right time. But it also had a lot to do with me pre-planning, having my alert set and saying, okay, I'm not going to enter a trade until my alert gets hit. And that has just saved me so much time and energy since I've started to do that and really hold myself accountable to getting off the screens and setting alerts, especially during dead hours. But it also keeps me from taking a boredom trade, because if I was just staring at the screens, what if I would have entered here, got stopped out? A lot of times people are taking bad trades because they can't force themselves off the screens long enough to allow their really, really key A+ levels to get hit. So I took puts here, we had the flush down, I exited, and that was where I made $14,000 in 20 minutes. Now, that was my best trade of the week. My worst trade of the week followed very shortly after, and this is a pattern that I have been noticing. So specifically with myself, I have hit a few of these $14,000, $15,000 trades in the past few weeks. Now, this doesn't always happen for me. However, I have sized back up my accounts because I feel a little bit more confident with where we are in markets and my ability to execute. I did downsize my accounts and do some small account challenges, if you guys hadn't seen, where I did the 1,000 to over 10,000. I think it took me like a week and a half. But I like doing small account challenges, not only just because they're fun and I can show you guys what is possible with a small account, but it also helps me reset because I'm playing with less amount of money. Therefore, I can have a little bit more wiggle room and not feel so much pressure when the markets are very, very uncertain. Now that I'm feeling more confident on market directions, I did push my buying power back up. And so in this trade, I think it was like 4,000, about 4,000 in this trade. And then I got over 300%. And so, people are always like, well, what did you put in that trade to make that amount of money? And I think they just don't understand the power of options, especially with proper risk management. That is key. You can easily blow your account, and timing. But on to the bad trade. So whenever I hit a big trade like this, I get very, very big headed very quickly. Not so much in the fact like, oh, I'm the shit, look at me, I just made 14,000 in 20 minutes. Yes, temporarily is really cool to think about that, but it's more so my ego. So I've noticed that like my ego starts to take over my trading, and I get overconfident in my ability to predict what's going to happen next. And if you guys notice yourself doing this, please drop a comment down below, because it helps other people when you can relate and say, okay, yes, I notice these patterns. It's all about being very self-aware. In my opinion, the self-aware trader always wins. And that is the one who can recognize the bad habits, especially that they've created, and try to break those as soon as possible so you can become more successful. And so for me, the bad habit, my ego taking over, is taking on too much size because I'm more confident in myself. There's nothing wrong with having confidence, especially in trading. However, I was very, very, very confident in the meme stocks, the GameStop, AMC, and BBBY to run again. And that might have something to do with me getting a 1,000% runner on AMC when we ran to 915. I believe that was last week. So December 1st, I caught a 1,000% runner. I was really set on catching another meme stock call play, especially with GameStop earnings coming up. And I did catch another really solid trade on AMC, but my mistake was breaking my rules. I broke actually several rules, and this comes back to the fact after a big win, which was that $14,000 trade, I tend to get big-headed, my ego takes over, and that leads me to breaking rules. So I think I'm going to start implementing into the future when I do hit a big day and I really knock out of the park, like if I make over 10 grand in one day, then maybe the next day I make myself scale back my account size, or maybe I take that day off. This is just me and my plan, and I'm bringing you guys through my thought process on how I can prevent myself from making these mistakes. So what I did is I went to Bed Bath & Beyond. I was super confident. I actually got this right, and we saw a nice spike here. So I was playing weekly calls, which was super dangerous. I always tell the group, do not play weeklies, especially on penny stocks. These just do not have enough volume and liquidity. But right here, we started to spike up. And at one point, I was up almost $4,000. And this was literally the same day. This was on 12/8. So the same day that I made 14,000, immediately after that trade, I was up almost 4,000. But me, in my head, and my ego, my big head, that was not enough for me, and I wanted $4 or more on Bed Bath & Beyond, and I decided not to take profits like an idiot. However, you can see clearly in my language that I use, I am very transparent. In these markets, if you don't take profits, you don't have profits. If you hold options overnight, you have the chance to lose it all, aka it becomes a lotto. And that is exactly what happened. So instead of taking almost $4,000 profits, which would have been an $18,000 day, I decided to hold these overnight, which was a huge mistake. And the next day, I ended up taking a massive hit. So not only did I lose almost $4,000 in profit, I also lost $3,000 that I had into that position. Allowing myself to have 3 or 4 grand out of a big $15,000 day to play around with has just automatically led me to a stupid decision. There has never been a good trade that follows that big day. And that is basically because I allow myself to break my rules. And just because you have a big day, it shouldn't be a reason for you to say, okay, whatever, I'm throwing my rules out the window. You got, a big hit today, so you're allowed to just go crazy the next day. And I actually think that can be a huge trigger for a lot of people, because if you're doing so well with following your rules, one bad day can throw you off the horse enough where you just spiral down, and next thing you know, you've blown the entire amount of profits that you've made. So if you made, $1,000 and you're so proud of yourself, one bad day could cause you to then lose it all very shortly after. Or if you are seeing profits in these markets, that you're quick to take them. And if you do hold overnight, just expect to lose it all. That's what I tell every single person in my group. If you're holding overnight, you're basically risking everything that you put into that trade, because we are just way too volatile. As you can see, we are up, down, and nothing is ever guaranteed in these markets. You can see we shot up to 410, and next thing you know, all these bulls who were super excited for the Santa rally are now getting in their head, second guessing themselves and creating too much chaos because now they can't predict what direction we're going in. As traders, we really don't have to predict what direction we're going in. We just have to react based off what is in front of us. And so I just wanted to give you guys that little tip on trading psychology. I hope it helps you. At the end of the day, yes, it was a very solid trade. It was really good timing. It's insane to me. I will never want any other job than this one, because where else can I make that kind of money in 20 minutes? However, I also want to remind you the flip side of that is catch yourself. If you make a big trade, if you're feeling really, really good because you just had a big win, that is even more of a time to step up your rules, to double down on your discipline and not just let it all go out the window and allow yourself that flexibility. I really think that's going to do you more harm than good in the long run. Anyways, I'm done rambling. I hope this video was helpful for you guys. It was a little bit longer than I expected. But with that being said, if you're interested in anything in the trading community, education-wise, or the free trading seminar, make sure to check the link in the description box down below. And with that being said, I will see you guys next week.